Hi, and welcome to ECCB Connects, a production of the Eastern Caribbean Central Bank designed to share with you who we are, what we do, and how we serve you. On today's episode, we speak with Chief Director Policy at the Eastern Caribbean Central Bank, Tracy Polius, about how the ECCB is working to empower consumers and protect businesses through the introduction of an Office for Financial Market Conduct. We'll share more with you after this message.
ECCB at 40. The Eastern Caribbean Central Bank will mark 40 years of service to the governments and the people of the Eastern Caribbean Currency Union this October. We invite you to join us in the virtual hall for the launch of ECCB's 40th anniversary celebrations, Thursday, 19th January at 8 p.m. ECCB at 40. Stable, transformative, accountable, resilient.
Tracy, welcome to ECCB Connects.
Thank you, Karina. Happy to be here.
Now, the ECCB, as the monetary authority for the Eastern Caribbean Currency Union, has as part of its remit to ensure the stability of the financial sector. And now that has extended to the introduction of an Office of Financial Market Conduct. Tell us, what is financial market conduct?
Financial market conduct regulation is really the regulation of the business engagement of financial firms with their customers to achieve particular objectives. We want to ensure that we establish clear frameworks that govern the engagement of financial firms with their customers. We want to ensure that the market does not engage in unethical business practices. We want to ensure that the market is furnished with adequate information so that financial market participants can make appropriate and informed decisions.
Why is it appropriate, or why did the ECCB feel it fit at this time to introduce this Office of Financial Conduct?
Well, the market itself suggests what it wants. So in the case of the Eastern Caribbean Currency Union, we have been hearing about issues related to practices of financial firms and how they engage with their customers. And added to that, the market is dynamic and it's changing. So the manner in which financial firms engage with their customers is changing. So financial firms are now leveraging a lot of ICT technologies to have their customers access financial services. So there emerges issues of data privacy and customer protection. And as the market changes and evolves, we felt it fit that we need to introduce measures to ensure that consumers are protected.
The introduction of this framework is really in response to the evolving financial sector that we find ourselves in as an ECCU.
Correct. It's in response to the evolution of the financial system, the changes in the modes and models of financial business that firms are engaging in. So firms we have a lot of online business, we have a lot of digital transactions, and therefore we must ensure that our people are taken care of, that they are protected.
You spoke about the protection of the people. And my question would be, we have this framework that is in place. Of course, it's going to outline the rules. How does the consumer, the regular man on the street, how is he impacted by the introduction of this framework?
The regular man on the street is impacted in a number of different ways. In our case, we also want to have a mandate for financial literacy and for financial inclusion as part of our financial conduct framework, and therefore the regular man on the street will see a situation in which he or she has access to a basic suite of financial services because the framework would allow for the market to provide so for the regular man. Additionally, we would look at financial literacy to increase the awareness for basic financial market participants so they could understand financial transactions, get comfortable with them, and be able to participate in a more meaningful manner in the financial system.
So it's really about empowering the regular citizens, or all of us as citizens of residents of the ECCU, to be able to compete and function in a developed financial sector?
Yes, it is about empowerment on one level to enhance the level of information that we have, to give us information and to give us literacy so that we can do better. We could improve the way we do business in this environment, in this complex, increasingly complex financial system.
And is this expected as well to impact investors external to the region? How will that enhance how people do business, as you said, coming in from outside?
So when you have regulation and you have regulatory frameworks, what it allows for transparency and it allows for predictability. People know the rules. They know what they are supposed to get if you're a customer, what the financial firm is supposed to provide for you, and if you're an investor, you know the rules by which you need to engage your customers. So it allows for transparency in the market and it allows for predictability in the market, and these are two very important factors that allow for effective business transactions.
Now, if I'm a consumer and I have a particular complaint, if I entered a business place, I felt like the rules were not followed. How do I address that particular issue with the financial framework in place?
So at this point in time, we are at the conceptual stage. We have designed a conceptual model in principle, so it's very broad, and the Monetary Council has approved this model. Given that it's approved, we're now at the design phase where we'll go more granular in terms of how do we approach this regulatory apparatus for the Eastern Caribbean Currency Union. Our thinking is that in each country we would have a financial ombudsman who would be available to take complaints from the market about whatever is happening in the financial sector, whatever complaints they have in that jurisdiction, in their engagement with financial firms. We will have within the Eastern Caribbean Currency Union, or I should say we hope to have, an Office of Financial Conduct. And within that office, we may have a chief ombudsman, and we will have a team dedicated to the analytical work involved in financial market conduct regulation, whether it be competition analysis, whether it be looking at the practices of firms, whether it be designing of standards. That team would be focused on that work.
A hub and spokes approach, so to speak, for the persons on the ground to interact, feed this information into and have it addressed. Tracy, tell us, what are the next steps in terms of developing the framework?
So the next steps, we will do some further research in terms of how we want to refine our model, what the structure of such an entity might look like, and then we would look at getting that approved and turn our attention to the policy piece that would inform the drafting of the legislation to support the Office of Financial Conduct.
Tracy, the whole concept of financial market conduct may be somewhat unfamiliar for some. If you could talk to us about some of the situations where financial conduct would be important and how we would see it demonstrated.
One example that comes to mind, Karina, is where a financial firm may have a new service on offer for its customers. And often you get a notification in the mail or via email that informs you of this new service on offer. It might be an exciting product, but sometimes you're not given an opportunity to opt into the service. So you're told, well, if this is a service that you don't want, then you visit the branch and opt out of the service. So this is one area where sometimes regulators would intervene and say to a financial firm, well, you should allow your customers to opt into a service rather than opt out. So the customer has a choice as to whether he or she wants to have that service rather than assume that the customer would like to have this service and have to opt out of the service, right? Another example is the provision of adequate information to allow people to make decisions. So sometimes, for instance, you may go on your online banking and you see a service being provided and say, subscribe to this service. It's provided you some wonderful new information about your pattern of spending. and you subscribe. And it's only after you subscribe you realize, oh, there's a cost attached to that. So these are some examples, though simple, would require, intervention on the part of a regulator.
As we're speaking, we've been focusing on the consumer and how this empowers the consumer. Does the financial service provider also have rights or protection within this framework?
Certainly, because there are rules by which the financial firm has to engage. And by virtue of having those rules, the financial firm has structure and predictability in terms of knowing how to operate within the law, so that the financial firm has predictability in terms of how to navigate the space and when they would be operating outside of the law.
Tracy, can you give us some examples of other economies, financial sectors, where we would see market conduct in play?
So there is some market conduct regulation taking place in some jurisdictions within the region. In Trinidad and Tobago, there's an office within the central bank, as well as the Bank of Jamaica. Elsewhere in developed country environments, we've looked at the case of Malaysia. They do have a financial conduct regime operated again within the central bank. Quite a very interesting regime, where they have financial literacy as well as financial inclusion mandates as part of their financial conduct regime.
And as you spoke about the developing countries, is there a difference in terms of how the financial market office operates in a developed versus a developing country?
What I would say is that it depends. So generally in developed country environments, financial market conduct operates principally from a market standpoint, where you're looking at just ethical business practice, disclosure of information, ensuring, looking at the engagement between the firms and the customers, right? And that they operate within a particular frameworks that are set out. In developing countries, typically they add mandates to the Office of Financial Conduct or the Financial Conduct Regulation, because there are other objectives that you'd like to satisfy. In our Eastern Caribbean Currency Union, for instance, it's a decent jurisdiction. We would like to see more financial sector development. We want to ensure that the market continues to develop, right? And for the market to continue to develop, we need for people to participate. And for them to participate effectively, they need information, which is disclosure, but they also need the financial literacy. So adding the financial literacy mandate allows for people to become better informed, and have more knowledge of the kinds of products and services and what the objectives that they could use them for and deploy them for, to be able to build wealth, to be able to utilize in their day-to-day living. And therefore, we feel that the financial literacy mandate should be added.
And ultimately help to grow and develop our region in a positive trajectory.
Correct. And also, similarly, financial inclusion. It's no strange fiction that people have been hearing about issues of being unable to open accounts. People having difficulties with opening bank accounts because they require, 2 IDs and a range of other, documents. And that's a financial service. And you want to ensure that people have access to a basic suite of financial services. And therefore, having a financial inclusion mandate is also important in our jurisdiction.
Tracy, thank you so much for speaking with us on ECCB Connects.
Thank you for having me today, Karina. It was a pleasure.
And now for this week's financial tip.
The basic budget formula for your after-tax income. 50% of your income should be allocated to fixed expenses. This would include loan payments, mortgage, rent, utility bills, child support, and any debt that requires monthly payment. 30% should be allocated towards your financial goals. This would include your savings, saving towards your retirement, an emergency fund, or investment. And 20% should be allocated towards your variable expenses. And this would include your entertainment, dining, or perhaps traveling.
We've come to the end of this episode of ECCB Connects, where we discussed the introduction of an Office for Financial Market Conduct within the Eastern Caribbean Currency Union. Financial market conduct is the regulation of the business conduct of financial firms. It will establish clear rules or frameworks that govern the engagement of financial firms with their customers. It is designed to build awareness and financial literacy within the ECCU market and will help improve access to basic financial services for residents and citizens of the ECCU. Thanks for watching, and be sure to join us next week when we bring you another episode of ECCB Connects and share with you who we are, what we do, and how we serve you.